Welcome back, everyone. Today I'm examining what I consider to be a massive financial maneuver in the entertainment world. AMC's newly announced USD $425 million strategic debt refinancing. So let me unpack this situation step by step. AMC is essentially pulling off a high-stakes financial swap here. In my view, it's like taking your most expensive high-interest credit card and trading it in for a way better one that gives you a much longer runway to actually pay off your balance. What's fascinating to me is just how elegant the mechanics of this swap actually are when you look under the hood. The structure they've designed shows considerable financial sophistication. They secured a commitment from Deutsche Bank in New York for a new senior secured credit facility up to USD $425 million. And they're running this transaction through their European division, specifically through a subsidiary called Odeon Finco PLC. My analysis suggests they want to close this deal on or before April 6, 2026, which gives them a relatively tight timeline to execute. But the real story, the exciting part in my opinion, is what they're actually paying off with that new money. That old debt consisted of these senior secured notes that were just hanging over their heads, and those notes were due in 2027. The interest rate on those notes was pretty brutal, at 12.75%, which was really weighing down their financial flexibility. You have to understand the broader context here. In the theater industry right now, the year 2027 represents a looming wall of refinancing risk, largely because of the pandemic's lingering effects. A lot of these companies took on incredibly heavy, expensive debt just to survive the closures, just to keep the lights on during those dark months. So having a massive payment due in just 3 years puts a very real ceiling on how aggressively you can invest in your business today. In my view, they desperately needed to tear down that wall. And from what I can see in the documents, they accomplished exactly that objective. It's not just about shaving a few points off the interest rate, although dropping from 12.75% down to a fixed 10.5% is huge for annual cash flow. In my opinion, that represents a major win for their income statement. But the critical piece here is actually time itself, specifically pushing the maturity date much further into the future. This new term loan pushes that maturity date all the way out to 2031. In my calculation, that is effectively buying themselves 4 full years of extra breathing room to operate and grow. In the current exhibition market, having guaranteed runway through the end of the decade is absolutely massive from a strategic planning perspective. It just gives management the flexibility to streamline their capital structure without that 2027 cliff constantly staring them in the face during every board meeting. And here is where it gets really interesting for their overall corporate strategy, because this Deutsche Bank deal was evidently so favorable that AMC actually walked away from a previous plan they had already announced. They just scrapped it completely, which in my experience is a fairly aggressive move. They had already announced a different offering of senior notes and another term loan facility to the public markets, and they just canceled it outright because this new option was that much stronger in their assessment, which raises an important point about market timing and corporate leverage that I think is worth exploring. When you're managing a balance sheet of this size, you are constantly shopping for the optimal capital structure, always looking for the better deal that might emerge. By canceling that previous offering, AMC really signaled that they have enough leverage and enough confidence from major institutional players like Deutsche Bank to demand better terms than what the public markets were initially offering. They found a more efficient path to fortify the balance sheet and just pivoted immediately, without hesitation. So what does this all mean for you listening today? Why should you care about the liability management of a theater chain in your daily life? Because if I connect this to the bigger picture, this high-level corporate finance directly impacts your actual consumer experience the next time you visit a multiplex. Remember that AMC is the largest movie exhibition company in the world. In my view, we're talking roughly 855 theaters across multiple countries and over 9,600 screens globally serving millions of customers. But operating these physical theaters is incredibly capital-intensive in ways that most people never consider. You can't just rely on weekend ticket sales to fund massive nationwide renovations across hundreds of locations simultaneously. The math simply doesn't work that way. Mastering that capital structure, securing a 10.5% rate instead of bleeding cash at nearly 13%. That is literally what frees up the capital to fund the innovations you see when you walk into the lobby today. It functions as the hidden engine of the entire business enterprise. Financial flexibility pays for those comfortable power recliner seats that have transformed the viewing experience over the past decade. It funds the expanded food and beverage menus with everything from chicken tenders to specialty cocktails. And it builds out those premium large format screens like IMAX and Dolby Cinema, which are so crucial for getting people off their couches and into a theater rather than waiting for streaming. In my opinion, It fundamentally changes the math on what they can afford to build out and experiment with to keep guests engaged and coming back repeatedly. Every new innovation you see ultimately traces back to financial decisions made years earlier. Okay, move on charts. Let's break down the AMC Entertainment Holdings 10-minute chart for the upcoming trading session by starting with a comprehensive look at a potential green day strategy. Looking at the recent price action, we saw an opening price of 1.19000, followed by a quick push to a high of 1.20000, before the stock dropped to a low of 1.15000 and eventually settled at a closing price of 1.170000. The current chart pattern clearly reveals a prolonged intraday consolidation, or rectangle formation, where the stock is trading in a very tight channel following an earlier morning sell-off. From a technical analysis standpoint, the price is trapped, but holding just above the volume-weighted average price of 1.1658. The moving average convergence-divergence indicator has flattened entirely at the zero line, confirming a current lack of strong directional momentum. For a bullish green day to successfully play out, AMC needs to hold firmly above that 1.1658 support level and generate enough buying volume to break through the heavy overhead resistance zone. This upper resistance is situated at the 200-period moving average of 1.1843 and the bottom of the Ichimoku cloud near 1.1900. If momentum builds and breaks these barriers, the primary target for the session will be retesting the daily high of 1.200000, while relying on a critical floor at 1.15000 to prevent any unexpected breakdowns. Shifting our analytical focus to a potential red day strategy, the technical setup presents significant hurdles that could easily weigh the stock down. The thick red Ichimoku cloud extending into the future indicates heavy overhead resistance waiting for any attempted rallies, which keeps the broader intraday bias slightly bearish. If the price is rejected by this overhead cloud and begins to slide, it will immediately test tight local support levels at the 50-period moving average of 1.1609 and the 20-period exponential moving average of 1.1621. A failure to hold these moving averages signals a high probability of a bearish continuation. In this downward trajectory, the immediate resistance to watch would be the previous close of 1.17000 and the higher 200-period moving average of 1.1843. As selling pressure increases, the primary target for the bears will be driving the price down to retest the low of the day at 1.15000. If that support caves, the stock faces a critical floor down at the chandelier exit level of 1.1413. Traders should watch the volume closely to see if AMC can finally escape its current tight channel, or if the overwhelming overhead resistance forces a deeper breakdown below that crucial 1.15000 boundary.